Stop what you're doing because this is breaking news that could save content creators thousands of dollars. I'm talking about a major tax change that just came out of that big, beautiful bill you've been hearing about. And it directly impacts podcasters, YouTubers, streamers, and anybody else who earns tips or donations online. So let's get into this right now. Hey friends, I'm Ralph B. Step Jr. I am the Content Creators Accountant. I'm a licensed accountant, I'm a business coach, and I'm a full-time creator just like you. And when I tell you this is big, I mean this is really big. But only if you understand it and only if you apply it correctly. Well, inside that big, beautiful bill is a revision being called no tax on tips. You've probably heard about it. Now that's a catchy phrase, but here's the truth. It's not a tax-free money for everybody. It's a targeted deduction designed to help certain workers. And yes, digital content creators are included in that. This is the first time we're seeing creators explicitly named in a tax benefit like this. So if you make money on YouTube super chats or live stream tips or listener donations, hey, even buy me a coffee style platforms, stars, gifts, badges, cheers, there's a lot of them. Any kind of voluntary audience contributions, then part of that income may qualify for a special exclusion from federal income tax. And depending on your income level and the amount of qualified tips you receive, this could save you hundreds, thousands, hey, maybe even 5 figures. But, and you know I always say this, only if you do it correctly. So let's clear up the confusion because creators mix this up every single day. Let's talk about what a tip is. A tip is voluntary. It's not required. It's not tied to a promised benefit. It's given solely because they want to support you. Hey, they love you. If someone's expecting something back, it's probably not a tip. So here's what usually doesn't count as tips. The memberships, subscriptions, any paid courses you offer, those Patreon tiers if they're getting any perks, any digital products you're selling, sponsorship payments, and ad revenue. Those are business income. They are not tips. The IRS really cares about the nature of the payment, not what YouTube called it in the dashboard. But here's a big warning, the mistake that will cost people money. Here's where creators are about to get themselves in big trouble. Most platforms lump everything together, and most creators lump everything together as well, and then they take it to their accountant, and the accountant lumps everything together as well. But if you mix your tip income with your ad revenue, or your sponsorships, or your subscription payments, you could disqualify yourself from the deduction or accidentally misreport income and trigger penalties. Let me repeat this slowly. This deduction is not automatic. You got to track your tip income as its own category. Treat it as its own revenue bucket inside your business. So now let's talk about how much creators actually could save. This is where people need to get excited. And yes, this could be meaningful money, but I want to set some expectations clearly. The savings depend on your total income, how much qualified tip income you receive as part of that income, how you structure and document your business, and whether you're filing correctly. All those things are really important. And as I said at the beginning, some creators may save a few $100s, some may save several $1,000s, and a small group of creators with large tip-driven revenue could save 5 figures in taxable income. But again, only when the rules are followed. Now, somebody said to me, Ralph, is this going to trigger audits? So let's talk about that fear because a lot of people fear the IRS, and I know a lot of creators feel that way. The short answer is no. Claimant deductions doesn't trigger audits. The risk comes from sloppiness. If you report everything cleanly, you'll be fine. But if you treat every dollar as a tip, you won't. Clarity lowers risk and confusion raises it. So now you might be saying, Ralph, what do creators need to do right now? Here are my immediate steps. Not next month, not next year, not at tax time, now. Number one thing, I'm got 4 things for you to do. Number one thing, separate your tip income. Go ahead and create a dedicated category that it doesn't mix with other things like sponsorships or ads. That's number one. Second thing, keep the platform statements and evidence. Maybe you get some screenshots or exports or PDFs, whatever you need to prove, hey, this is a tip and it was on this platform. Number 3, do not change your tax strategy yet. Don't go and restructure your business. Don't guess and don't assume. And number 4, plan now and file later. This is really a planning stage change, not a hit the panic button situation. Now, here's where creators will get bad advice. Be blunt. The internet is about full of guru tax advice, and that is just completely flat out wrong. You're going to see headlines like, creators pay zero taxes, or everything is tax-free now, or you don't need an accountant anymore. I'll be in trouble if that happens, but ignore those things. I'm not here to give you clickbait. I'm here to give you clarity. I help creators keep more money and sleep better at night. Let's get into some common questions that you'll get. Number one question I'm hearing already. Does this apply to podcasters? Yes. If you receive voluntary contributions or tips, it applies to you. Here's another question I've heard. Are super chats and stars included? Yes. If they're voluntary, then generally, yes, that would be tip income. Another person asked me, Ralph, are memberships included? No. That's paid access. That's not a tip. They're getting something for it. Another person reached out and said, how do I track this? And like I said, create a separate category, label those transactions, and save the statements because you're going to have to prove this to the IRS at some point. Somebody reached out and said, Ralph, this sounds like a loophole. It's not a loophole. This is written right into the law. Another person said, Ralph, should I restructure my business? Not yet. Let's wait until guidance is clear. And finally, somebody brought something to my attention. They said, Ralph, is this permanent? It's a great question. We don't know. That's why planning matters so much. Right now, it's good for 25, 26, 27, and tax year 28. If you want to help understanding how this applies to your creator business, or you want clarity before tax season hits, I'm going to encourage you right now. Go to contentcreatorsaccountant.com/help now. I'll give you that one more time. That's contentcreatorsaccountant.com/help now. Let's make sure you keep as much of your creator income as legally possible, because creators who plan early win early. And as I said at the beginning, this is developing news, and I'll be updating you as the IRS releases more guidance in the future. But for now, take a breath. Don't panic, but take the steps that protect your business. I'm Ralph Estep Jr. I'm the Content Creators Accountant, and this is your breaking news update on the no tax on tips rule from the big beautiful bill. So stay smart, stay compliant, and keep creating. Have a great day today.